So what actually happens if you cut rates 100 basis points is not just the 300, but you can get this reflexive positivity in the economy. What that allows you to do is, even if that causes a little bit more inflation, you're actually growing yourself out of this whole thing. So then you ask yourself, well, hold on a second. If the numerical justification is there to lower rates, and it has all of these other positive externalities for the United States economy, why don't I do it? The only answer is political.
Hi, everyone. Welcome to Smart Invest. Chamath Palihapitiya, a billionaire venture capitalist, thinks that the U.S. government might be about to find a hidden $600 billion money boost that doesn't involve printing new money. Chamath talks about a possible future where inflation falls and the Federal Reserve cuts interest rates quickly on the All In podcast. The Fed, led by Jerome Powell, should soon lower interest rates by 100 basis points, he says. This could save the government about $300 billion in interest payments on its debt. Another $300 billion could come in from a rise in tax revenue, especially from capital gains. This $600 billion change could have a big effect on the U.S. balance sheet in the next 2 months. Chamath says that this policy change could bring a huge amount of money into the U.S., which would raise the prices of assets. The video goes into more detail about how these possible Fed moves, inflation trends, and market forces are coming together to make what could be a historic turning point for the economy and financial markets. Depending on how it plays out, it could either spark a big rally or cause chaos.
Yeah, the wrong people won. In the early 2000s, I think that there was a war of ideas, and there was a group of people that advocated for this reckless form of free trade and this globalist view, like every country is going to meld into one mega monolith country organization that'll get governed out of New York by the United Nations and its sleeve organizations. And that worldview won. But it was the wrong worldview. And it didn't acknowledge that we have competing philosophies, competing priorities, competing ideals of what the future looks like. And I think that we need to go back and reset all of those things. If you just take where we are, if you can just put the Sankey diagram back up, there's a couple things that are really worth noting that people need to fundamentally understand. I said a couple of weeks ago that I thought the GDP print was going to come in hot. I think everybody now is sort of where I am. So let me give you the next thing that I think.
Can I just ask you, though, why is it hot? Do you have a thesis on why GDP spiked so much? Or potentially did. That's obviously a forecast.
I don't know the puts and takes yet. And I think when we see the print, I have a way of forecasting this stuff, which is a bunch of signals that my team and also many macro teams all around the world, the bond vigilantes to the hedge fund guys, they all feed it to me. And what I was noticing was that we were going to come in, I said in the low threes. And I think, if Atlanta Fed is right, I don't think they are, but I think it's going to be in the low to mid threes. It's going to be meaningfully greater than what people are expecting. So let me just give you my next prediction. My next prediction are two really important things. What this Sankey diagram looks at, which is a snapshot of the balance sheet and the health of the United States in May, misses, in my opinion, two very important things that have to change. The first, and this is a positive for the Trump administration and the United States economy, is we are run rating $300 to $400 billion above forecast in terms of our receipts, meaning the revenues that we will take in. And you get to that number by looking at the last 3 months of tariffs and forecasting forward, assuming a reasonable balance here. So back to Tucker's point, yeah, we all thought that this was like a boogeyman, that you weren't allowed to touch it, and that if you touched the stove, you were going to get burned. The mathematical reality is that this is actually going to work out much better for us than we anticipated, and it's going to be somewhere in the range of $300 to $400 billion of extra revenue per year. That's a huge win. So why is that important? That then sets up this next cataclysmic thing that we're going to see over the next 60 days, which is, what does Jerome Powell do? If Jerome Powell stays politicized, his incentive will be to keep interest rates where they are. If Jerome Powell looks at the conditions on the ground, especially when you start to see inflation stay in the low twos and approach 2.0, the real thing that he's going to be under tremendous pressure to justify is, why are you not cutting? And just to give you a sense of how important that is, if we cut by 100 basis points, that's another $300 billion. Now, in that case, that's not money that we get in, but it's money we don't have to spend. So if you add these two things together, we are in the next 60 days going to have to reforecast the American balance sheet where this is, or we're actually going to be able to positively forecast an extra $600 billion, $300 billion of incremental revenue and $300 billion of savings. Jason, if that happens, watch out. What does that mean, watch out? It means that every single risk dollar is going to run to America. Every single one.
Yum, yum.
Forget Japan, forget Europe. There is no place to put your money except the United States. So I think that we have to figure out how to get Jerome Powell on the side of America versus on the side of what could happen politically. Because I think that there's probably a version in his head that says, my gosh, if I do this, it helps Trump. And if I don't do it, it hurts Trump. Practically, that is true. But the reality is the conditions on the ground justify cutting.
Chamath Palihapitiya said there could be a $600 billion shift. This isn't just a number. It's a rare economic chance that could change the way U.S. finances work. The U.S. economy has been balancing high debt interest payments, slowing inflation, and growth that doesn't stay steady. Many people agree with Chamath that since inflation is now going down, the Federal Reserve has the political and economic freedom to start lowering interest rates. If Jerome Powell starts aggressive cuts, it won't just lower the cost of borrowing money, it will also mark the end of the tightening cycle. This could cause asset prices to rise, business conditions to get better, and investor confidence to rise in stocks, crypto, and venture capital. But Chamath's idea isn't just about monetary policy, it's also about fiscal policy. A 100 basis point drop in interest rates could save the government $300 billion in interest costs. It could also bring in another $300 billion in capital gains tax money. That total change of about $600 billion would make the U.S. balance sheet much better, which would give policymakers more room to boost the economy, invest, or lower debt. But this outcome depends on inflation staying low, the Fed being proactive, and the market reacting positively. If all of these things happen, the second half of 2025 could see a strong wave of economic growth that many investors may not be ready for.
I believe that these decisions are political. I think that the Federal Reserve has veered away from actually controlling the money supply in the best long-term interests of the United States and more towards what benefits the short term. And this ties back to how I started this.
What is Powell's motivation?
Somewhere in the 2000s, Jason, we transitioned away from having the strategic 20-year conversation about what's in the best interests of America. And instead, we started to have these unipolar globalist conversations. And the people that got into these centers of power, the IMF, the World Bank, the Federal Reserve, the central banks around the world, they all worked towards an agenda that is now being undone. I'll give you an example of where this is now being undone. Just today, the World Bank undid a rule around being able to fund nuclear energy. And you would have thought, well, hold on a second. The World Bank steps in to backstop all these developing countries when they're in the middle of all this nonsense, right? And if you think about a country that's developing, what is the single biggest input to that country? Energy. And you think for the last 40 years of multi-trillion-dollar bailouts, we never demanded abundant clean energy in the developing world? Of course not, because it was a political decision. Well, let me give you another data point.
Yeah.
Okay, now let's just scenario play.
Yes, please.
What happens if Powell rips in a 100 basis point cut right now? I'll tell you. So one part, which is mathematical, is the interest on the debt goes down. We save $300 billion. But there's something else that happens, which is the Fed does control the front end of the curve, meaning how do people borrow money for small amounts of time, from 1 day to about 2 years. If you make that cheaper, we know it's a test that's true as time. What happens is people borrow more money. That fuels more growth. That will end up in GDP. So what actually happens if you cut rates 100 basis points is not just the 300, but you can get this reflexive positivity in the economy. What that allows you to do is, even if that causes a little bit more inflation, you're actually growing yourself out of this whole thing. So then you ask yourself, well, hold on a second. If the numerical justification is there to lower rates, and it has all of these other positive externalities for the United States economy, why don't I do it? The only answer is political. There's a simpler explanation, quite honestly. Like, if you look at Powell's history, he was nominated as a governor by Obama. Then Trump picked him out of the Fed to be chair, but then he was reappointed by Biden. If you look at the vice chair of the Fed, Phil Jefferson, he was appointed by Biden. If you look at Michelle Bowman, who's the vice chair for supervision, she was appointed by Trump. Michael Barr, appointed by Biden. Lisa Cook, appointed by Biden. Adriana Kluger, appointed by Biden. Chris Waller, appointed by Trump. So I think the point is that there is a balance of power here. If you look at political affiliations that tend to favor a democratic view of the political landscape. And let's be honest, what benefits the Democrats more? A thriving economy and a shrinking deficit going into the midterms, or the exact opposite?
The reason I'm bringing this up, and I'm just harping on it, is he's a Republican who Democrats have opposed. So I'm just trying to reconcile this grand conspiracy that he wants to sink Trump.
I don't think it's
if
a
he's
conspiracy.
a Republican.
I think it's just a general decision. I think these guys move the dot plots, and you can see it in the movement, okay? They're going away from reading the actual data and moving in concert with the data to giving themselves a window to let the data play itself out beyond a reasonable point. And my point is, the beyond the reasonable point is the key part, because when you talk to the large, sophisticated pools of money, many of them are like, what is going on here? I'll say, I was sad at the end of last week. One is my friend and the other is my president. And it seemed like a really profound friendship. And so I was bummed. Here's what I'll say this week, though, on a much more positive note. I saw Elon on Tuesday, and I got to spend a couple hours with him at Tesla. He let me audit a couple of meetings with him, actually.
It's always fun. Yeah.
Yeah. One was Dojo, and then right after that was the Optimus team. One thing I'll say is, I've said this before, but he attracts these incredible men and women to work for him. They are inspiring. Just sitting in a meeting and hearing it, what they're doing was amazing. And then second, to see Elon in action at scale in that way is like watching a maestro paint a masterpiece. It's really impressive. Yeah. And then separately, I saw President Trump doing a couple of pressers, and he was in his zone of excellence. So it seems like they're going to find some common ground here. They are better together. And I'll just say, Elon, amazing. Tesla, incredible. And I would not be sleeping on this company, is what I would say. I think this is where I'm glad that it's President Trump in the seat. I think he's shown a consistent desire to off-ramp all of these conflicts. And if he and Witkoff can hopefully hold the line with Bibi and everybody else, I think we're way, way, way better off. But you see this, like every time we're on the verge of victory, somebody in the military-industrial complex invents some escalation of something so that we can just go to war. It's the answer always seems to be, let's go to war, or let's support a war, or let's enable a war. And the bulwark to that has been the president. If we go to war, Tucker's right, this totally screws everything up. I mean, you could see oil double. What happens to the economy of the world, of world GDP, of everything, of inflation, if you have oil at $100 a barrel, $112 a barrel? It's not good. So you have to wonder, like, why would people want this escalation? Who wants this escalation? And you see that it's deeply beneficial for America to avoid anything calamitous happening here. So I hope we find an off-ramp, and I hope that the president gets his way.
Chamath Palihapitiya and David Sachs are warning of a key moment in the economy. The Federal Reserve could soon lower interest rates, which could cause a huge change in both fiscal policy and the financial markets. Their argument is based on facts and past events, not on guesswork. The Federal Reserve may cut rates by 100 basis points if inflation keeps going down. This is because of pressure from both the economy and politics. A move like this would not only save the U.S. government hundreds of billions of dollars in interest costs, but it could also cause asset prices and investor risk appetite to rise. For crypto investors, this could be the start of a strong new bull run. In the past, Bitcoin and other risky digital assets have done well when there is more money in the market. For example, Bitcoin went from 5,000 to almost 65,000 yen after interest rates were lowered in March 2020. Even when interest rates have been lowered less, crypto has responded with strong rallies. When yields go down, safe investments like treasury bonds become less appealing. This extra money often goes into high-yield plays like crypto. With a rate cut now, big banks might become interested in Bitcoin, Ethereum, and DeFi again, which could lead to the next big crypto boom. Also, if the economy gets better, political narratives might change to focus on technology and innovation, which would support digital assets and tokenized platforms even more. Some people, like Chamath and Sachs, think that the economy as a whole is about to change. If they're right, crypto could be one of the biggest winners.